What's up, people? Welcome back to Invest with Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So lately, with all the news around Virgin Galactic, Tesla, and Neo, I really haven't had a chance to check in on ChargePoint since the earning call review about a month ago. You can find that video here. But before we dive in, it's of course worth noting that the volatility we experienced in market this week was centered around Papa Powell's decision on interest rate increase. As expected, the Fed raised by 0.25 percentage point, taking the new Fed funds rate to the range of 5 to 5.25, which is significant. Fun fact, the last time that the Fed funds rate was at this level was August of 2007, right before the financial crisis. I'm not saying that because I believe that's what is about to be triggered here, but you can see why the stress on the banking system has people on edge. Next week, Wednesday, we get to find out what the CPI number for April will be. The relevance here is, of course, that a significant drop this go around could justify the much anticipated pause by the Fed at the next FOMC meeting come mid-June. Keep that in mind. Now on to ChargePoint. While the rest of the market struggled this week, ChargePoint did manage to outperform with a gain of 1.15%. So in today's video, I'll go over some of the most recent news around the stock. We'll check in on the overall analyst sentiment and close with what I'm personally doing as far as buying, selling, or holding. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So if you think about it, ChargePoint really has not been making headlines lately, but that doesn't mean that they are not being active. Just this week, they participated in the ACT Expo, or Advanced Clean Transportation Expo. The goal of every company in attendance is to showcase the latest and greatest they have to offer in terms of product and services. Pasquale Romano, ChargePoint CEO, along with other industry leaders, was in attendance as a guest speaker. I can't say that I knew too much about this event prior to researching for the content of today's video. That said, it does appear to be a great event to network, proudly display one's technological advantage, and potentially even acquire new customers. Speaking of acquiring new customers, over in Europe, France particularly, La Maison Trois Gros, which is a family-owned hotel with a top-tier restaurant, just tapped ChargePoint for their charging solutions. The owner provided this reasoning for selecting ChargePoint, and I quote, "Our needs were quite clear. Find an easy-to-use charging station with a simplified payment system for total autonomy on the part of the user." And he added, "ChargePoint's solution allows us to save on administrative time," end of quote. And so the same reason we see grocery stores, casinos, and restaurants in the US offering EV charging applies here as well. As an EV driver, one would be more inclined to choose a retail destination, shop longer, and or dine with a business that allows them to charge during their stay, right? So businesses in the hospitality sector who provide charging solutions have a competitive advantage, right? And ChargePoint is well positioned to continue capitalizing on that both here in the US and abroad in Europe. Last but certainly not least, LinkedIn. Everyone knows LinkedIn. LinkedIn, in collaboration with ChargePoint, held a webinar on why offering charging at a workplace was critical. The following were outlined as some of the top reasons: attracting top talent, creating a positive employee experience, establishes the business as a sustainability leader, and it shows the business is planning for the future by encouraging EV adoption. I'll link the full article if you're interested to dive in a bit deeper, but the bottom line is this. As EV adoption grows, the demand for ChargePoint services is increasing. This is precisely why their customer acquisition is accelerating and revenue growth has been this exponential. There aren't too many companies that are confidently projecting a 50+% compound annual growth rate through the end of this decade. And ChargePoint is one of the few, right? So they expect to turn profitable in 2025. And so in my mind, this definitely continues to be a strong long-term play. Now, looking at the analyst consensus, you can see that reflected in the recommended ratings. Yes, the near-term price action has been challenged, but it's more a reflection on the overall macro backdrop, accounting for the fact that ChargePoint has no profit versus the lack of confidence in their ability to deliver on the goals they have set forth. So the consensus rating for the stock remains a moderate buy, and the breakdown is as follows: 5 buy ratings, 4 hold, and still 0 sell rating. That's important to note. The high end of the range remains unchanged at $28, and the low end has been adjusted lower from $13 down to $10. The average consensus price target is also a bit lower at $15.86, but realize that this actually implies a potential gain of 80.84% from current levels. So again, great upside potential here. So then, what am I personally doing? This stock has been trading below its 50-day moving average of $9.61 and has been in a downtrend over the past month with an overall loss of 7.97% year to date. If you're looking for some quick near-term gains, this is not the way to go. Again, this is not the one for you. You'd be better off buying some PEPE coin, as you're more likely to double or triple your money in a very short amount of time, but there's also a lot more risk. Personally, when it comes to ChargePoint, I have my eyes on next year. This is when rate cuts go into effect and more liquidity gets pumped into the system. I've bought a few more shares since the last time we spoke, which now brings my total to 250 shares. The goal is to reach at least 1,000 shares before the bull market in stocks return, late this year or early next year. And so the last thing I will say is this: if, like me, you believe that the future of transportation will be heavily reliant on EVs, then stacking ChargePoint shares is a no-brainer. It is currently flying under the radar since smart money is focused on the staples of the stock market, like FANG, or looking for safer bets with dividend investing, allowing them to keep turning a profit every quarter. Personally, I don't need to do that. I'll continue to use this time to buy as much as I can within my means when I can. But on that note, that is it for me today, keeping it short and sweet. Reminder that next week we also have the earning call for Virgin Galactic, and you know I'll be covering that. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.